Okay, so I always get a lot of questions around, all right, we're now in 2024. I made a lot of money last year. Taxes are going to be owed here soon in April. Like, what can I do? The short answer pretty much is nothing. Like most of your tax planning had to happen by 12/31. Now, I would tell you there's one exception in here, and it's retirement plan funding. So retirement plan funding, you can't fund your 401k because your employee deferral had to be done through payroll prior to year end, but you are eligible to do profit sharing contributions, or you're eligible to set up a defined benefit cash balance plan. Now, I will tell you that if there are those who's sitting, listening to this video, if you have, I would say, more than 20 employees, the cost of funding these employees is prohibitive. So if you're over 20 employees, this is not a tax strategy for you. If you're smaller, especially under 10 and under 5 is even better, the fewer employees, then you get the most of the benefit of funding the retirement plan. So I'm not going to read through all this, but we basically had a client came in and kind of we were working with the CPA. CPA was fine. It kind of was like, all right, well, this is just the reality. We can't do a whole lot. And we started looking through some of the strategies. And this is a gentleman who runs a company, had 2 employees. And so what we were able to do was basically set up a cash balance plan. He was able to fund $125,000 into this cash balance plan. And that 125,000 saved him 70,000 in federal and state tax, which is crazy because it essentially worked out to being roughly 56% 56% tax bracket. And we all know the math, right? The highest federal bracket is 37, the highest state is 13. How would you get to 56? Well, there's part of the new tax code called the QBI deduction. And in at his income level, he was ineligible for the QBI deduction, which is a qualified business income deduction. He was ineligible, but by funding to the cash balance, it moved his income below the threshold, and then he was able to qualify it. So not only did he get the benefit of the federal and the tax savings, or sorry, the federal and the state tax savings, he also got some additional benefit for QBI, which is why the tax savings was so huge. And so that was, and then now he's got 125 grand in a tax deferred account that's growing. So this was, again, just another example. And so the case studies that I'm trying to illustrate, it makes sense to just look and ask the questions, what can be done? And sometimes there's phenomenal solutions that we get really excited about that we unlock for the client. And then there's sometimes we can't. But that's where we really want to do a deep dive, because I hate when people come in and we look at their taxes for last year and said, you know what, if you just would have seen me 6 months ago, I could have made these changes, but now it's too late. So I love at the start of the year, this is the time to start, getting wired to think about things differently for 2024.